So tonight we are going to be looking at uh, we are going to be looking at risk management, risk management and account growth. Account growth. All right. So I'm going to be doing the risk management in such a way that I know there are certain people that don't trade the way we trade. I feel they are new to the group. So I'm going to be teaching on how we do on how we obtain our risk, all right? How we get when you hear us use the word 1 to 3, 3R, 5R, those kinds of things, how to go about it, all right? Now, seeing the way we trade, all right, we are sniper traders, all right. We don't like, because we are seeing a buy signal, we drop a random lot size. We drop a random lot size on the chart or on our MetaTrader 4. We just don't drop a one standard lot size or a two standard lot size. We don't do that. We don't do that. Our risk is always specific. Always specific. We don't trade without stop loss. We don't trade without stop loss. All right. We don't trade without stop loss. And because a lot of people just trade without stop loss and they have like psychological stops. We don't do that. As a matter of fact, probably maybe I should even say this. You are going to forgive me, but I think I and some of my guys, I wouldn't mention their name, we're having a discussion earlier this year, and were talking about, they were even telling me how that a prop firm certificate really carries a whole lot of power right now for investors. I know there are a lot of people that are looking for investors and all of this kind of things. So we got talking and they were like, your prop firm account certificate, that's when you clear the two challenge, carries a whole lot of power, whereby investors can just see the certificate and then they can really invest in you. Probably you publicize it, put it on LinkedIn or wherever you can, put it out there. Now, that's the power to it. But the idea now becomes that if anybody is going to invest in you, they want to make sure they see that you follow your risk properly. How much are you willing? How much are you willing to lose in a day? How much are you willing to lose in a week? And this is the reason why, or this is one of the reasons why a whole lot of people blow their account. A whole lot of people blow their account. I think it was 2020 when Papa Ichime was saying something that really stuck to me for till date. In like, if you can trade a demo account for 6 months, having consistent loss and win, meaning you're losing consistently and winning, your win rate is consistent. Now, not necessarily profitable at large, but that when they are saying your account, they are saying that you don't risk more than $50 per trade. And when you have to look at the account history, you don't see more than $50. And as the account kept growing, you increased your risk to, let's say, $75. Not that today you are going to be losing $50, tomorrow you are losing $100, next tomorrow you are losing $20. Investors don't want to invest in those kinds of people. Why? Because they don't know how to manage their risk. We are talking about risk management, so, and I'm sharing ideas with you that can help you in the long run. All right, you want to make sure you have a specific risk. You understand? So we normally use most of this position size stuff. Uh, what's going on? Okay. So let's say you want to take a trade now. Let's say you want to take a trade. Now, this place, let me use this arrow, yes. This place represents the amount. Of course, I know a lot of people know all of these things. This area here represents the amount of trade you want to risk, or the amount you are risking. Now, your stop loss must be in place. That if price were to pass this place, meaning area of violation, right? If price were to pass above this level, then it should stop you out automatically. Yeah. So I really need you guys. Remember, I'm talking to people that don't know how to don't use stop loss and all. I want you guys to really learn how to make sure you calculate how much you are risking per trade. I think there's even this video on my there's this video on my Telegram, my YouTube page. Probably maybe I should even refer to that video now. Where's the studio now? Hold on, let me look for the video. Oh no, sorry, I was meant to go to your channel. Just hold on a bit, because life is now very easy. Life has been made easy for everybody, right? You can easily even get this. Where is that video now? I had this very video, how to install position sizer. How to install position sizer. I mean, this is beautiful. You can just watch the video and it helps you. All you just need to do is move the moving averages. I don't know. Probably maybe I should even do that while I'm here. Let me see how I can switch to. Let me see. I'm coming. Let me bring up my MetaTrader 4. Give me some minutes so that I can show guys on how to do it. Okay. Let me hide this. Okay. All right. Okay, I think I can show my. Can I show it now? Okay, I need to hide some things. All right, I think I'm safe now. All right, I'm coming. Let me share screen. There it is. Okay, share. All right. So everyone can see my MetaTrader, right? So the no, if I bring out the position sizer, it's going to show what I don't want people to see. All right, so let's go back to this, please. Let's ignore that. Let's go back to this. I mean, it's pretty straightforward. So once you install this, it helps you. Okay, you can even see it here. If you want to go short, right, you put your entries there, you put your stop loss, and it to calculate exactly how much you are risking, right? It gives you the exact lot size to use. Please make sure you use this every single time. Make sure you manage your risk. Make sure you manage your risk. There are a lot of videos that we have done in previous time. I think if we are to go back to this channel as well, during the last boot camp, in this where is it now? This range and liquidity that my brother did, Fortman that he explained on how you are to manage your risk, like how much should you risk per trade, how you should split your account, and all of those kinds of stuff. Please, I am begging every single person, make sure you manage your risk. Remember, I said I was not going to be saying so much on these two topics tonight. We are going to do another thing. Please, I am begging you, make sure you manage your risk. Make sure you manage your risk. It is very, very important. Never trade without a stop loss. Never trade without a stop loss. And while I'm saying that, account capital preservation is better than capital loss. There are a lot of people that they don't know how to preserve their capital. I think there was this year that Euro USD was doing so many nonsense that I couldn't catch one single trade because all the things I was seeing in the market was not aligning with my buyers. So what I just did that week, I think I came to the market on Monday, I didn't see anything. Tuesday, nothing. Wednesday, I didn't see anything. Thursday and Friday, I just decided to just stay out of the market, and I even posted it online. If I look for the message, you'll see it. I just decided to stay away because capital preservation is key. Capital preservation is key. All right. While I've said all of that, I'm giving you references to materials that can help you on your risk management. Account growth, let's talk about how to grow our account. Now, when you are growing your account, you have to put in mind what pattern or what kind of growth are you doing? What kind of growth are you doing? Are you doing an account flip or you are growing your account? If you are doing an account flip, then you can say you want to flip your account from $100 to a 1,000 US dollars. That's an account flip, and you can put a range within that, probably in 1 week, in 1 month, in 1 year. I don't know. You can do that. But if you know you want to grow your account properly, you must understand the power of compounding effect. The power of compounding effect. The power of compounding effect. I used to say this over and over again. A lot of people want to turn $10 to someone's mic is on. All right. They want to turn $10 to $1 billion in 1 month. And it is not possible. Leave faith out of this question, out of this matter that we are saying. Don't say with God all things are possible. Yes, I know, but wisdom is also profitable to direct. Stop giving yourself headache. It is not possible for you to turn $100 to $1 trillion in 1 month or in 1 year. Stop setting elephant projects for yourself. Projects that are what? Unrealistic. This is the reason why a lot of people's accounts don't grow. They have not even defined what growth is for themselves. For me personally, in a week, if I am trading, for me, I want to make sure that at least I make, let's say, 10 to 15%. I know it's much. In fact, it's very much. It's very, very much. And I'll tell you another story, real life story. Let me check for something. Let me check if the person is here or not, so that I can leak the person's secret. Is he here? I don't even know if he's here or not. But I'm not. It's not like I'm going to mention the person's name. All right. So the person got talking to me, and the person said he met with an investor, and they told him that I think they wanted to give him a particular amount of capital, and they were like, "How much returns can he bring in a year?" And I think he said probably he can give like 30% to 40% in a year. And he was like, they said, "What? That's too much." That they were looking at 8 to 10%. No, but in a year. I mean, in a year, not in a week, not in a month, not in a week, not in a month. Now, I thought of that thing and I looked at it and I kept on reading and I got to discover that most of these Fortune 500 companies, let's say the Amazon, the Microsoft, and all of these companies, they are expecting a returns of, let's say, maximum 15% returns on their investment yearly. Well, I stand to be corrected. I'm not so sure. But I feel that's what they do. They are looking at 15% to 10% to 15% of their capital every year. Now, you in a week, you have made like 5% of your account and you are not happy with yourself. That's why I said a lot of people have not defined growth. And someone is saying that, sir, 5% of $100 is how much? Is $5. Are you telling me that if I'm making $5 every week, when do I want to become a millionaire? You see, Papa Jimmy, we keep on saying something. Trading is what? Is a marathon, not a sprint. Trading is a marathon, not a sprint. As a matter of fact, I think there was one time like that I wanted to take a prop firm account. What I did was I took a $50 or $100, and then I loaded it in, was it even synthetic or currency pairs at that time? This was last year. And I just flipped the account to like $120. No, was it? Can't remember because I took about maybe a 10K account back then. And it was that money I used in paying for my prop firm. What am I trying to say in essence? That I know you want large capital, grow small. If you take a $50 account now, how much is a 10K account? How much is a 5K account? Trade that $50 to the amount that this thing is going to take. If it is going to take you a month to trade to that level, trade it to that level, then take the prop firm account, clear the challenge, and you can start earning at least big cash. You get the idea of what I'm trying to say. Play the long game. Play the power of compounding effect. Stop. Yes, I know you are in debt. A lot of people are in debt as well. You are not the only one in debt. Since this day that you have been trying, since the time you have been trying to flip $10 to 1 billion just to clear off people, it has not worked. Are you going to keep on doing something that has not worked? I mean, try something else. Really, try something else. You understand what I'm trying to say? Try something else. My desire is for people's accounts to grow. In fact, one of the reasons why I'm doing the masterclass is because I want to see people's accounts. I want to see people's accounts grow myself. Like, there'll be accurate documentation. Your account grew from what point to what point? Because most of the questions I'll be asking before even accepting anybody is, are you ready to follow instructions strictly? Because I don't want to hear I got greedy and everything, and then all of a sudden I lost it. I'm sorry. You see now I'm sorry. Maybe I can remove you. I will return your money to you because I don't want someone that will not listen to instructions, simple instructions. I will give your money back and carry your wallet and go. Because at the end of the day, the person now starts influencing others. You understand what I'm trying to say? So play the power of compounding effect. I think Coach Tony has taught most of the people in STF. Someone's mic is on mute. Please, can you mute your mic? Who is this now? Please, someone's mic is on. All right.
The person is Silvan.
Yeah, I muted the person already. Thank you. All right. So make account growth right. We are talking about account growth. See to it that you allow your account grow. How much are you planning on earning in a month? What is your starting capital? This is going to help you control greed. It's going to help you control greed. It's going to help you overcome your challenge of overtrading. It's going to help you rest. You all see peace in trading. Yeah, so that I know a lot of people have a lot of, there's house rent, there's wife, there's food stuff, there's plenty things. Yes, I know. I'm also an human being. And before someone will start saying that you already have money, well, thank God, money no the rich person, as it were. And if you say I'm rich, amen. Thank you. But I'm trying to tell you things that has helped me. See to it that you allow your account to grow. Define what growth is for yourself. Let's take a starting balance of $100. Let's take a starting balance of $100. This week, look to make 5% of that account. That's 5% will be how much? $5. Yeah, I know you can just randomly make $5. I know you can randomly make $5, but do it in such a way that it is systemic. It is systemic in that I am going to be risking $1 per trade, $1 per trade, or $2 per trade, or $2.5 per trade. This way, you will not blow your account easily. You will not blow your account easily. Now that you have your $5, your account is now 105. It's the power of compounding effects. There is even this website we used to use back then for that thing. Can't remember the name again. Next week, you have $105. Again, look to make $5 of 105. $5 of 105 is what now? I can't remember. Do the math and give yourself 6 months or give yourself 1 year. Remember, Fort was saying during the pre-boot camp that you are committing yourself to one thing. And please, don't get bored though. I'm still going to go to the chat. I want to teach something. Don't get bored and you'll leave the call. I want to teach something I've not taught at all in the general public. Because, like I said, I'm ice cream. Everybody likes me, and I like sharing ice cream. So don't leave the call. Don't leave the call. What was I saying? Fort was saying that give yourself a task of what you are going to do for the next 6 to 1 year that you are going to commit yourself to it. I'm going to load my account with a $50 and I am going to do the calculation of a compounding effect, probably let's say $5 every week or $10 every week. Sorry, give me a minute, guys. Okay, so give yourself, you are loading $50. I'm going to be making $5 every week. Now, when someone comes and flashes, I made $500 today, celebrate it. Don't allow it get to you. Don't allow it get into your mind to give you depression that when will I start? Grow, 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 grow. All right, grow. Commit yourself to it. This is what I am going to be doing for the next 6 to 1 year. You'll discover that at the end of that 6 to 1 year, you are really, really grown. And even with most of these things that I've taught you, there is no way in a week that you will not see a profitable trade with everything I have taught. Oh, mommy, thank you. Thank you. Here, let's see if we can quickly do the maths now. I think my forex compounding starting balance is, let's say we are starting with a $50. Period is, I don't know how this works, but I think period will be 6 months. Game per period. I don't even know how this thing works. There's a lot of mathematics here. Please, mommy, can you unmute your mic and teach me on what to do? As much as I know maths, I don't think I understand what this skinny that is here. How to calculate compound interest. So, for example, hey, is she here? Well, I don't know if you can go around this, if you can get the idea, because as it is like this now,
Coach,
I don't
just
know.
continue. I'll get back on this one.
Okay, I should go. Okay, thank you. So commit yourself to the 6 months or the 1 year, you'll discover that at the end of that 6 months or 1 year, you have really grown massively. You have really grown massively. And in fact, this is one of the things I really want to make sure I commit masterclass guys to: the power of this compounding effect. The power of this compounding effect. And you see, the reason why I'm even hammering on this thing is because in recent time, it dawned on me again that this really is the key. And I know some people will know where I got that from. It was from this pastors conference. If you're a Muslim, I'm sorry. If you're a Muslim, I'm sorry. It was from this pastors conference that Covenant Christian Center, Pastor Pojoyemade and Dr. David Oboeli did. And when Dr. David was teaching about the compounding effect, that was where this thing really dawned on me again, that this thing really is powerful. And scripture will say that though your beginning may be small, yet your later end shall greatly what? Increase. All right, thank you. So they said over here we should put 100 and period 6 and 5% gain. All right, so let's calculate that. Oh, beautiful. So at the end of the 6th month, you'll be having 120. Now, starting balance, total profit 5. This 6 is 6 days, I guess. These 6 days. So 6 months will be how many? 6 months will be 355 days. 355 days divided by 2. 355 divided by 2. I think let's just put 177 here, or 170. Calculate minusing excess 170. So the $100 ending balance 105. Total profit is $5. You understand? You made 105. The next day you are going to be making this. The next day you are going to be making this. And remember, you are going to be calculating your risk. You are having a specific risk. All right. At the end of that 6 months, just look at this. This is crazy. I mean, this is really crazy. Like, how many people really can commit to this? I know this is beautiful. I know this is very beautiful. At the end of the 170 days, I don't even know if I'm correct, but I guess I'm correct. Oh, I mean, this is crazy. Let's put like $50 here so that the money is not much. Seeing this thing. Okay. So at the end of that, I mean, this guy, you're sitting on $200K. $200,000 US. That's a lot. That's a lot. But how many people are willing to commit to this? I'm not saying you should tell me that you'll commit to it. I'm trying to tell you, will you really commit to it? Can you? Can you commit to it? Can you commit to it? So I really want to see your account grow. I really want to see your account grow. So try something out. Start more every day or every week. Every day or every week or every 2 days. I don't know how you want to do your own compounding effect. Or start small and see your account grow. All right. Of course, on Friday, I spoke a whole lot about psychology and what to do on how to manage your stop loss and everything. So today, I guess that will be all I'm taking. All right, let's get into the charts. So tonight, and a lot of people have been saying so many things on my charts. CBDR. So let's talk about CBDR. Hallelujah. CBDR. So CBDR is the central God. Central bank dealers range. Central bank's dealers range. Now, I'm not going into so much details. I'm just going into how you are going to utilize it on your chart. All right. So the central bank dealers range is usually between 1600 New York Standard Time and 2000. This before Asian range. All right. So the central bank dealers range is usually between the 1600 and the 2000. All right. So let me push this to the side. So between 1600 and 2000, you are going to get a range, the central bank's dealers range. All right. Now, you are going to mark this out. Remember the way I said you mark your Asian range out, right? The same way you are going to mark your central bank's dealers range out, clearly like this. So you put this as what? Your central bank dealers range. All right. Now, you then try to clone this. You just do it the way I'm doing it. All right. On the long run, you get some other things. Then you move this up one bit. You make sure it is complete. So now this one move up is known as one standard deviation. So I know a lot of people have seen this on my charts before. So I call this one, or they call this, or ICT calls it one standard deviation. So this one standard deviation up, and then if you clone again, it will be two standard deviation up, and you can get as much as 4 standard deviation up. All right. And then this is 2 standard deviation, and you can get this for as 4 standard deviation. So this 1 standard deviation up, 2 standard deviation up, right? Then this, you clone again, and then you bring it down. This is 1 standard deviation down, or you can call it -1 standard deviation down, anyone that you feel comfortable with. 1 standard deviation down, and this will be what? 2 standard deviation, or -2 standard deviation down. So standard deviation down. All right. Now that we are here, now let me put this out as a disclaimer that the idea is, I just want you to get how you are going to use it. Again, don't complicate it. Don't complicate it. Don't. Just get the idea. Now, when you do this on your chart, right? Now you're looking to the left. At 1 standard deviation and at 2 standard deviation, what are you seeing to the left? To the left, you either find an imbalance or an order block or institutional candle or a breaker block. You see one of it. You see one of it. You see one of it. So we are expecting that price should trade now. Is it going to reverse at 1 standard deviation or 2 standard deviation? You don't know. You are not so sure. But it's going to reverse at one of these places. Now I'm teaching you precision. So price will get to that place, right? And then reverse. And then if price were to reverse, okay, That doesn't matter. So you are looking at price reversing there. So you are looking to the left. Are you seeing an institutional candle or an order block there? Now, the beautiful part about this thing is that it is usually above the Asian range and below the Asian range. So you are not so sure if it is one standard deviation or two standard deviation, all right? Do you understand this now? Yes, you understand. I know a lot of people don't like talking. Yes, I know you understand. I'll take your silence as yes. Now let's go to the chart and see this play out. All right. Remember I said one day I'll teach you why there's a lot of markings on my chart. Now look at this. This was Thursday. This was Wednesday. Now remember the first thing I said, that the central bank dealers range is usually between what time and what time again? I know you'll not talk. 1600 and 20 on.
20.
Yeah, 16 to 20. So where is 16? Now mark out your 1600. You can see it below here. And where's that my horizontal line? This 1600. All right. And then 2000. Remember, I've told you, nobody should come and ask me what's Nigerian time for 16 and 20. Set your time in New York time. It makes life easier for you. All right. All right. So within this is your central bank's dealers range. Then you clone this one standard deviation up. This line is my one standard deviation up. This is my, where's my brush? This is my one standard deviation up. This is my two standard deviation up. All right. Now, if you look to the left, what can you see? One, you can see previous day's high. You can see another previous day's high, right? What else can you see to the left? If you have to look at it structurally, right, you can see this is a high and this is a low, right? And if you have to look to the left of that, what can you see here? There's an imbalance here, and there's a what here?
The imbalance, the other block.
And this, thank you. Another imbalance and other block. What did you notice here? Price came into that range, and then it dropped. All right. So let's say you were not playing that buy that day. Let's look at it again. Now, central bank dealers range. And before I continue, this was above what? The Asian range. You get. Now, central bank dealers range, one standard deviation down, two standard deviation down. At one standard deviation down, what can you see here? One, you can see your order block, and that was your perfect sniper that they gave you that day. And two, you can see your what? Your imbalance. Can you see the imbalance? And that was where they came into. Now, like I used to say, don't take my word for it. Go and back test. If it does not work, I wouldn't have brought it. And that was where it went up. So for this trade, you would have gotten some of your risks to reward. Okay. All right. So that will be that for that Thursday. Now let's do Friday. Now Friday, central bank dealers range between what time and what time again? Okay, I think I need to clean my chart because it's a new week and I don't want anybody to any distraction on my chart. All right, yeah, my chart is clean enough now. Okay, Thursday will be what? Central bank's dealers range, right? One standard deviation down. What can you find at one standard deviation down? To the left, an imbalance. Standard deviation down, what can you find? An imbalance. So let's see, probably this imbalance here, existing from here to here.
Perfect entry.
Can you see that? So let's say you missed this, price came back again and did what? Swept this low and all of that good stuff. Do you understand that? Now, I'm doing for last week. Let's do Tuesday into Wednesday. Tuesday into Wednesday. Did we get that? Tuesday into Wednesday, what can we find? The central bank dealers range. We had 1 SD down, 2 SD down. Of course, I said you can have it up to 4 SD. Now, you know the beautiful part about this thing? Do you want to know the beautiful part about it? The same way you're going to use your central bank dealers range and 1 SD down and 2 SD down is the same way you can use it for your Asia range. So Asia range, 1 SD down, 2 SD down. I don't know how many people figured that out already. So let's say they didn't play the Asian range. Make sure you're on this call, Lou. I'm telling you can see my heart. I'm really sharing out a whole lot of paid stuff for you already. So honestly, I feel my master classes, I've even thought, well, let me continue. So, Asian range, 1 SD down, 2 SD down. Below 2 SD down, what can we find? Below 1 SD down, did we get an accumulation? Of course, you are going to be making sure you are getting your break of structure before you take your trades, and it must be in London, New York. Don't trade outside those time zones. Don't trade outside those time zones. If you look to the left, yeah, we can see this liquidity sweep here, right? We can look at this imbalance here. Can you see? I don't know how many of you remember this trade here. In fact, let me bring up something so that you can see that everything I do, there's a reason why I mark out specific imbalances and places. I'm coming. Just a minute. Just a minute. Where is it now? See this one? Let me load this one. Let me load that one. Yep. Against that will be the first one. That was my before. This is the after. And then this is just last week. And I can't see the other one I'm looking for, but we can still do this. Now look at this. Tuesday. Look at this here. I marked out this imbalance. What was that one imbalance? Standard deviation. And then this other imbalance. Let's go back to that chart. So I marked out this place, came into this place, reacted a little bit, dropped down lower, swept all of this low and came into this place. Can you see that? This before here. You can see this and you can see this. And you can see this sell side liquidity that I marked here. Look at the after. Price came into that place, and I think I even put an arrow there that I'm expecting price to reverse there. You can see price came into that place and did what? Reversed. And I'm feeling I should not even share this. I'm feeling I should not share this call. YouTube. Someone's mic is on mute. Alright. I don't mute the person. Alright. I'm feeling I should not even put this video on YouTube because there's a lot of paid content that I'm sharing. So let's see. Monday, did it happen on Monday? Well, Monday did happen. Well, Monday you played your Asian range, right? Came into 1 SD up, swept these highs here, sell side liquidity before dropping. All right, so that was the trade idea. Now, you know the beautiful part about this thing is, even if you are wrong, you still get your 1 to 3, even if you are wrong. See this as my desire to see that your account grow and you make money and you really reduce your loss. Do you understand? Do you understand? So, I don't know how many people have been able to help tonight. It's short, but I guess it's powerful. All right, lastly, one more thing. One more thing before I go. That will be, let me clean this. and also clean all of this. It's a new week and I want my charts clean as clean as possible. All right, one more thing as I go. Now, I know it is hard for you to be doing all of this. I know it's hard for you to be doing this central bank dealers range, calculating your timing and all of those things. I know it's hard for you to do it. How you can do it is, and please, if you did not get this one, don't come to my DM or don't tag me on how to do it. I'm teaching it now. Please. I know a lot of people used to do that and it used to vex me a whole lot. Come to your indicators and search for ICT everything. And this one, ICT everything by Code Brew Rush, I guess. This one, click it. When you click it, it comes up on your chart. You see all of these things, and then you can edit it as you desire. Let me double click this so you see it. ICT everything. Your time selection will be what? UTC -4. I think by default, this one might be UTC -5. Put it as UTC -4. Then you style it the way you are comfortable with. You can see it has a whole lot of stuff. A whole lot. Can delete the name here and put your own name there. That's how I got my RBTM that is above here. You can put your own Wealth than FX, whatsoever you like, whatsoever color you feel like. And if I want to get my chart a whole lot clean, I can just remove all of this stuff. You can see now that I checked on that, you can see how every other thing came up. I don't want my chart to be dirty. I want it as clean as possible. If I click that, you can see it showed for just last week. If I remove this, so what you can just do is to do what? Play around it, know what each one is for. You can see if I remove this section alighting, you can see that all those line left, and I have my white chart. You can see that. If I check it on, you can see it came up. Do it as much as anyone you like. It brings out everything for you as you want it. Again, comes to indicators. Type what? ICT what? Everything. Now I'm doing this twice. I know people will bear me witness. ICT everything. Click on your ICT everything. It comes up. And the only reason why you are not seeing it here is because I want my chart to be as clean as possible. Because if you think I'm using any other indicator that I've not shared with you, you'll be wrong. You can see I use this one, and I've taught you what I use this one for, right? This one is just to get this Euro USD here, and this AGFX watermark, ICT everything, and this. That's the only indicator I use. Nothing more, nothing less. Have I blessed you this night? Have I been kind enough to you this night?
Yes, you have a lot.
Yes, sir.
Any question? You see how I talk about that's not just now. Somebody already see what the name of the indicator. Talk out. See how?
ICT everything by Mr. Code.
Yeah. Let me stop recording now and answer questions.